And the best short-term business loans for you and your business are, hi, this is Michael with Viral Funding Solutions. I'm a business loan broker expert who's been doing this for a long time, knows the ins and outs. And perhaps you were searching on YouTube, best short-term business loans or another variety, and or you've watched me for some time as well, or this is your first time and you're like, who is this guy? Should I even believe him? Is he trustworthy, reliable? And hopefully you end up seeing that in this short video. And perhaps you are looking for a video where it'll show you on screen the different types of business loan products, walks you through the qualifications and requirements, which we're not going to discount because I have all of that. I'll link you to more of it down below in the description. But this is most important for you to listen to if you do not want to make mistakes after mistakes, trying to figure it out on your own, putting your credit out there and at risk, whether it's a soft pull or a hard pull. Even soft pulls hurt, and then lenders being able to see that. You have to be very careful of how you're distributing and giving your information to people. And so this, I believe, will be the only video you need to watch in terms of having somebody by your side who really does care about you first as a human, and then in business second, because there's a lot of content that you can get overwhelmed with, misguided on. People probably calling you right now from New York or somewhere in Florida or somewhere else. People from the Wall Street, Wolf of Wall Street. You're probably getting emails, text messages, and everything in between. Trigger leads where people buy data and information from the credit bureaus, and then they end up contacting you, cold calling you, emailing you, acting on my behalf, which I have no relationship with, or they act on their own behalf. But you're like, okay, what do I do? If that hasn't happened yet, be very careful. And it's by no fault of your own. And some of us, we do put ourselves in that position where we're applying too many places. So without getting too sidetracked, I'll jump into that towards the end of this video. The best business loans for you and your business are the ones that you can necessarily qualify for. And that reverse engineers back to what? Your fundability details. And that means what? Your time in business, your personal FICO credit score, your revenue, the type of business you are in, your needs currently, what existing debt do you have, what existing loans do you have open, haven't been paid off, the maturity date, origination date, how much do you have remaining on that balance, do you have a bank loan or do you not? If we're looking at a personal loan, debt to income ratio is heavily weighed with more things on stronger credit. They're not going to want to see a bunch of new trade lines opened. You applying to other loans, you getting other loans, if that would drop the amount you can get approved for. And if anything, you get anything at all. And so the best one is the one that applies to you and your specific needs. There are different services out there, so I'll cover a few of them. But whether you're in the construction, transportation / trucking, you are in retail, medical, it does not matter. I've worked with literally about all of them. I know the pain points. I know the problems. I know the questions. I know the roadblocks. I know the results you are likely looking for. And I'm there to hear you out. And so the types of services out there that you want to know about and also be careful about, because there are other agents or brokers or the referral partners or those people who are out there just trying to make it sound good. And then they send you something and you're like, yeah, this looks better than the other one. And then you're like, we look at it and go, oh, there's something wrong about this. And there's people out there who are there to get you. They just want to make money for their own business. Be very careful about that and value that relationship. Value perhaps the bonus that comes with that and the long-term relationship you have at play. And the way we can move you, more flexibility, better underwriting, maximum amount. Not every lender is created equally. One lender over here had just changed their guidelines, but this one didn't. This one changed their guidelines where they're not giving in that construction industry. They're not giving $300,000 like they used to. They're only going to give a maximum of $100,000 on a B tier client. That meaning you have enough sufficient details like your time and business revenue when it comes back to that, as opposed to an A tier client who has exceptional premium platinum details that lender still wouldn't give them enough, but this lender works better. So you may get a maximum amount over here. Maybe it's a prepaid thing. It's not all about that. And you have to think about how fast you can use these funds. Do you really need all that time? If you can pay it off early, good. The benefit has to exceed the repayment. Don't just look at it from I need to save as much money as I can. Yeah, you want to have more cash flow. I get that. But think about how much money you can make if you take this and you double, triple, quadruple your revenue. That's what you should be paying attention to, not just the interest rates, not just the term, the repayability. The amount you're getting, the repayability. If you can't get everything you want at once, start somewhere. Come back and get another one. Boom, boom, build. And we can look at another one in the meantime. Or how does it end up working? That's what I bring for you like no one else can. So the services, sorry to get sidetracked. Merchant cash advances. I know if you've heard of this, you're probably doing this with your eyes. And for those of you who don't know, this is based on future receivables. It's not technically a loan. And it's given to you based on your future receivables, which you're making in the future, but what you're paying back with a portion of your sales. So there's certain types of merchant cash advances where there's a fixed percentage and there's not a fixed percentage, where let's say you fluctuate in sales. One day you have more than another. The sale day you have a lot more sales, you get more taken out. And a day where you have less or nothing, none gets taken out. And then there's a fixed percentage. There's hybrids out there where it's based off total revenue as opposed to a traditional merchant cash advance where we look at your credit card statements and we look at other bank statements and other things we have to look at thoroughly. So there's hybrids where we can just look at those, and there's ones where we encompass all your revenue, checks, deposits of all sorts, wire, electronic transfers, how are you depositing, cash, ACH, whatever it is. But we'll encompass everything. So that's one product. You may see more slightly elevated rates between about 1.19 to about 1.7. Sometimes can go higher than that. It just depends on your revenue. And that's what it's based upon, revenue a lot more heavily than it is your credit. Credit is a factor, can determine your rate, it can determine your term. But if you needed more and your revenue backs that up and it's what you're looking for, can you make do with it with what you have and then build up into more? So that's one product. I don't want to go too far, but you can see between 3 to 24 months. It used to be between 3 to 11 months. Now it's an intermediate term. Sometimes you'll hear the word business term loan that's associated with the cash advance, 3 to 24 months. Sometimes there's just an individual product, which is a business term loan where you can get a monthly repayment. These advances, you usually see a daily or a weekly. Sometimes there's a bi-weekly and a monthly, but it's very rarely you see the bi-weekly or the monthly being given out in a cash advance because it's a higher risk. People end up in collections, defaults, etc. And you have to be a premier client with top revenue and credit and so forth. Then you have the business term loans between 1 to 2 years. And you can say that's a cash advance in a way because a lot of them kind of are. Whether the cash advance by itself, you see 3 to 24 months, or you see another product as a business term loan that has a monthly attachment. It can be weekly and or monthly. So those details may be a little bit different where we're requiring you to have at least 25,000 plus per month. We're looking to have, 660 plus FICO with 2+ years time in business. Then you might be in the room of 1 to 2 years. And there may be monthly payments available. We also have to see what existing loans you have. Have you refinanced? Have you tried to consolidate, pay any of that? How are we going to look at paying that? And so you may start off with only a weekly repayment, but you got to look at also the repay back. Like how much are you giving back? That's another product. And I don't want to go too in detail with that, but no foreclosures, no those liens, those bankruptcies the last 3 years or so, and so forth. So that's one, and I talk about these individually. I'll try to link you to down below. But there will also be a questionnaire form. It should be the first link. Click there, and it'll take you over to my questionnaire that I've put together. A lot of people do this. It's very popular. Fill it out, save securely. Fill it out. It'll land in my email inbox. I'll evaluate, analyze it, and give you a proper response back on your best funding option and option. Sorry, I have my laptop and I have a few sensitive emails I got to get back to here soon. But please fill that out, and then I'll be able to send you an email response back with your best funding option and options, and literally you can get started from there. It's a great energy and time efficient way of doing things. But lines of credit, you have those where you can get a revolving line, and this can be, there it is again, it could be between 3, 6, 9, 12, 18 or so, 18 to 24 months. Depending on what you bring to the table. A lot of the time you see up to 18 months, and even at 18 months, sometimes you see it with collateral. So 12 months is a really popular one that you see with lines of credit. And again, you can pull from and withdraw from. And this could be another short term because of the 12 months. And let's say you get approved for 100K, but you only need to use 50,000 of that. We'll only take out 50K. There's a little draw fee on that. And then you're paying principal and interest that accrues and how we amortize it. Those are some things I can go over with you in different loan scenarios. But yeah, once you pay that off, you only pay interest on that 50K you use, pay it off, and you can keep your payments lower. And a lot of people assume when they hear business loans or business funding, they think about a line of credit. And that's not the only thing. You have to think about other scenarios where if you're looking for getting equipment, it might not be necessarily a business line of credit, where you don't want to lock up your cash flow towards the purchase of an equipment. A line of credit won't always do that, but you won't always have the funds you need to use it for, and the amount of time you have to pay it back. And even on a lump sum, you know, there's reasoning behind equipment financing, and that's another segment. And getting an equipment loan for 1 to 5 years usually in the market, and then leasing or leasing to own, sales lease back, excuse me. You know, paying the vehicle out, and you know, write-offs, tax write-offs. There's a lot more that goes into all of this, but just know there's equipment financing, business lines of credit, merchant cash advances. Those merchant cash advances that blend in with the term loans of 1 to 2 years. You see 6 to 24 months, 3 to 24 months, but there is that individual one that it may make sense for you to get a monthly repayment. Then we can work on it. But if it's not, then don't be upset. You have to start somewhere, perhaps move from weekly to a monthly. You have to have a long-term play. And so really understand things. And I'll go into some things at the end here on how to like set yourself up for success, so you're not having to make these mistakes that other people do. Very quickly though, I can remember so far ago, and I already created a video on my story, but just to touch upon it a little bit, like yourself, working 9 to 5, like hard. Mentally, I worked hard on the computer, and also I had been moving supply. I was working for a financial/logistics role, and eventually this company would end up drying out and going down under, and I was one of the many, not from my own fault, just the company itself. And I remember working so hard and moving paper, helping out a company like HP, working as a subcontracting company, one of the higher regarded ones, and moving supplies and things like that, and underappreciated, undervalued, underpaid is an understatement. And I just knew I needed to change. I had gone to school, university, community, and I was thinking to myself at a time, do I need to go back to school? Should I finish another year, get more certifications? I have plenty of certifications. Or is there something else I can do? And I wasn't happy with where I was after about 3 years in it. For stability reasons, I stuck in there. And I was like, no, well, it's finally time for me to go. But the company ended up doing that. And I just didn't want to take another job, even if it was a very high paying one. Next move, it was like, very high. And I was like, well, there's other ways of doing this. So I ventured out my own route after a friend of mine communicated with me while I was having lunch one day, and then told me about ways of starting their own digital business. So I learned about passive income. Then I got home literally that day, threw my backpack in front of me as I opened the door, closed it. What it felt like I closed it too hard, but I didn't. And then I gingerly walked around the corner like speed walking. And then I grabbed my laptop that was sitting on my countertop, put it on my dining table where I was working at the time, and I did things in the morning. And I learned about it, and I started putting a website, a blog together, and started growing things with affiliate marketing, promoting health products, and then digital marketing as opposed to like a digital marketing agency. And then I had a couple of other businesses and so forth, and that I still have to this day. But, you know, when I got into this, it was because of trying to finance those businesses, trying to figure out like the whole LLC part, the business structure, making sure that I have the personal credit, the business credit profile, that I was leaning into the right lender or lenders, not just some faulty organizations. And I had my hiccups, like yourself, trying to figure it out, stumbling here and there until I was doing more research. And then a friend of mine actually reached out to me and told me about a lender, and I went there and I go get funding. And from there, it just opened up everything, like the partnership, the strategic relationship, growing into more terms, getting more funding over time, getting lowered rates. And you have to begin somewhere. I started with nothing, zero money coming into business for some time. Like a traditional brick and mortar, you probably can get it up and running like that. Not all, but mine wasn't there. It wasn't there for 6 months. Wasn't there even for like the year. I had to build it over time. I had to put the systems, the processes, the automation behind it. And I was so happy when I finally first earned that first dollar, and it was through an affiliate product a long time ago, promoting other people's products and services in the health space. It was about 18 cents or so. I think it was 18 cents or 8 cents, 18 cents on a pain relief product. Digital marketing agency, doing things and helping business owners, and so much more. But honestly, it finally became clear to me as I learned who were the right lenders in this organization. And I wanted to know, okay, what do I do? Like yourself, trying to figure it out. And after some time, you know, going away from the people who were just trying to get me. Like, you have to be careful. When you're searching up content like this, the reason why I have it this way, and I have other content where it goes into it on screen and shows you more, is because I want you to get this message that you are not alone. You have somebody by your side who knows their stuff. And I got into this field. I wanted to get into this field for a long time. But after I learned the ropes myself, I thought, okay, for my business, I thought, all right, it's time for me to show people. I can outsource a bit of that. I can focus on what I want to do here. And I learned the trade, I learned the art, and I'm always in the market, and I know what's happening as an expert. This is my stuff, this is what I focus on. And understanding that not every loan product or lender is created equally. They change their guidelines. The market today for trucking and transportation in general, you know, you got to have 5+ years in business to have 5+ trucks, have 50,000 plus in in gross sales to even be considered for a weekly repayment, to be considered for monthly repayments closer to 75 to 100,000 plus with those at least 5 trucks, 5+ years is preferred. The credit profile has to back it up too to even get you a monthly repayment. The debt that maybe you already have, maybe not, can't even get you a monthly to start with. You have to start with weekly, if not daily, with a different service. Personal/startup loans. I've funded people of all magnitudes. And the ultimate thing that I want to leave you with in this video is stop cherry picking. Stop trying to do everything. I'm not saying you shouldn't look around and shop around. I get that. I did it myself. But once you are in, that will become something less of that you need to do. When you have a broker, when you have that relationship with me, if you don't already, and if you do, you know that I care about you. I do. On a personal level, you're not a number. Get what I just said? I didn't say you're just not a number. You're not just a number. I said you're not a number. And if that's not something you want to sit with, and you would rather go to somebody who's just going to speak love into your ears and tell you what you want to hear, it may not even be true or factual. They'll have to come back and revise something, and they're gonna bait and switch you. And now I lost you to something like that. And then they're shopping your credit around. You don't know what you're doing. You're new to this. Or you heard from somebody to go to them, but that works for them, or that didn't even work for them. Trigger leads, organizations buying leads off of the credit bureaus so they know your history, so they know how to contact you. Syndication leads, there's data out there on the web. People know how much you've been applying for, how much you probably got or didn't get, what stage of the process is. I don't do this. I don't associate with those lenders. Value the relationship. That is ultimately what's going to take you far and beyond. And I get it's a logical thing. It's not all based off of the relationship. I get that. But what I'm saying is, if you're trying to scrap $1 here or there, I get 20 to 30,000 is not $1. But at the same time, the benefit of going this way is much better than that. And this might not even be true. This might be something that somebody's trying to beat around the bush with. And the long-term relationship, the bonus that you get with me, bonuses on top of that, with having somebody like myself and much more, it'll make a better difference. And if we have to go through a brokerage where I have already that direct lendership and those direct lenders a part of that, but because it's better to do it in-house, and we see how we can get you multiple offers, but we say, hey, no, we'll get you this one. And we didn't affect your credit. We just entertained that one. And we said, no, this one's going to give you more. Boom, this one works. And I already have that direct lender partnership. But it's better to do it in an in-house. I might have a team behind it. Or it might be just a direct lender. And why doesn't a direct lender make sense? Because they might not approve it for the most. They might just decline your file. Although you're an A-tier client, over here you could have got premium, maximum funding, at better terms, at better rates. But because you're new over here and you didn't have that relationship with myself and my team, you're going to continue to scrap shopping for the lowest price. There's a point where you have to save money. Maybe it's a mortgage, situation and cash flow. I get it. But think about that money. When you get it, what is it going to do? Is it going to double, triple, quadruple? Are you just using it as bad debt? Are you just using it for a rainy day? Then maybe a line of credit makes sense. Maybe a longer term, like an SBA loan, up to 10 years, if not 25 years with real estate, where you don't have to use it all at once. You periodically know what you're doing. Okay, so that's what I think I want to leave it at. Just to recap, the best short-term or any kind of business loan, this goes for anything, not just short-term. You got to hear those with the different services. Equipment loans are not so much short-term. They can be, but it's an influx of 1 to 5 years or so. Longer terms products, SBA loans. You might see that a little bit with lines of credits. You have 0% interest for 6 to 18 months credit line business credit stacking program. You have to have stronger credit though, 680 on all 3 consumer credit bureaus. Again, I'm not going to spend a lot of time on the exact qualifications. Merchant cash advances, business term loans can be somewhat intermediate, 1 to 2 years. They're kind of combined. The cash advance, sometimes it's by itself separately, but they're pretty much, there's not a lot of a difference there. And then you have quite a few more products out there, and it depends on who you're working with too. So if you want to get the best treatment, you literally are tired and sick of it, or you feel like you'll never want to put yourself in that situation where you're going to continue to get calls from these people of Wolf of Wall Street and with that accent and just trying to hammer and talk to you like a salesperson, and all they do is, ugh. I'm an introverted person, and so cerebrally I'm there. I like have my stuff together, mathematical minded and systematical minded. And if you want somebody who's going to listen to you and really not going to pressure you, push you, listen to you and make sense of what you're trying to tell me, not in a pushy or an aggressive way. I'm just going to say, hey, here's the truth. Here's what you should have been looking at instead. You overlooked this part, or you did think about that, but you just didn't weigh heavily. Should have done that. Or hey, this one does make more sense for you. Now let's say you do go for that one. Okay, what's the scenario thereafter? Simple. Okay, so best short-term business loans, you more or less know about them. And it doesn't come down to the interest, rather trying to get a longer term and better repayments if you can initially. If you can't get those, even all 3 of them, just work on what you can get. If there's negotiation power to start with less, start with less. I got approved for 100,000. You get, okay, well, I want to start off with at least 50,000, so my repayment becomes half of that, daily, weekly, monthly, bi-weekly. Okay, good. What's the contingency? What are some other things that we have to look at? Like as the parameters, the term duration, and this and that. Okay, we can revisit that. Well, I don't want this amount of funding. Well, do you have collateral, Mr. or Mrs.? Do you have a credit profile that's strong enough we can use to leverage? Do you have cash flow, credit, collateral? Those are the major 3 buckets. Do you have cash flow? Okay. Do you have credit? No. Do you have collateral? No. Well, cash flow. Okay, I don't have enough cash flow. Do you have credit? Yes, I do. Do you have collateral? No. How about no credit, no good credit, or not enough cash flow, but I do have collateral? Okay, collateral. We look at venturing that route. You have all 3, even better. And that's ultimately like when you get to an SBA loan, they won't always need your collateral, but they'll want to see at least what you have. If anything, not their primary thing, liquidity, equity, cash flow, and a few things before the whole collateral part. So that is going to conclude everything from me in this video. Look down below, first link, fill out that questionnaire form if you haven't. Get in touch with me. It's very stress-free, hassle-free. I'll reply back to that questionnaire. And please be serious. Don't just submit the form and then forget about it. Or sometimes we do forget about it unintentionally. But don't just submit it and you just Casper the Friendly ghosted or Homer Simpson into the bushes. Have you seen those memes? Don't do that. Nobody's got energy or time for that. So if you're serious, again, get in touch down below. I'll leave more information. Hopefully you got value out of this video. Keep looking out for my content. I'll continue to update you guys on SBA content, PPP content. Those 2 are not available at this moment. Employee retention credit, you can get up to $26,000 per employee in a refundable payroll tax credit for being able to retain employees, and then adjusted and looked at for the 2020 and 2021 quarters. It amounts to $26,000 per employee. I'll leave more information down below. Grants, personal/startup loans, everything in between, how to improve your credit, business credit establishing, and everything in between that again. So thank you for watching. You got to know the best short-term business loans in a nutshell and what you need to be careful of when you're looking for these and what to look out for, and evaluate the whole situation. Have the right business plan when you're coming into this. Have a pattern of what you know what you're going to do when you use this funding, so you can predictably at least know what will happen in the short and or longer term. So that's everything from me again. Talk to you soon. Bye.